Okay, I see that we can start the session. Welcome to all of you to this webinar organized in the framework of the Investor Horizon project. Today we will talk about IPR and how it matters for companies, and in particular for deep tech companies. Just a few words on the project. Which is financed and promoted by the European Commission and the Eureka program, and led by TechTour in partnership with IBM, BP France, Meta Group, and other organizations across Europe. The project has been kicked off in 2019, is coming to an end, and in these 3 years, the project supported selected companies to boost their investment readiness, and managed to support around 500 companies, which benefited from an acceleration program. Among the activities, there are these webinars, pitching session, pitching academies to prepare entrepreneurs to present their businesses in front of investors and experts. And there will be many other appointments. You can have a look at the Investor Horizon website, where you will find all relevant information about the future activities. Having said this, I will leave the floor now to our speaker, who kindly accepted our invitation, Willem Bulthuis. I hope I do not mispronounce your name. And Willem is a CEO at a corporate venture advisory, but he has a lot of experience on business angels. He's sitting in the board of a German Association of Business Angels, and will speak about the importance of intellectual property for your businesses, and about also the importance of the IP strategy you will be implementing. Willem will present for about 30 minutes, then you will have around 30 minutes for your questions and comments. This webinar is intended to be as an interactive one, so do not miss the occasion to ask your question to our speaker. With this, I'll leave the floor to Willem, and enjoy the session.
Thank you very much for that nice introduction, and thanks for the opportunity to be here. If you could make my other computer sharing the screen. The computer where I'm not muted.
Yep.
Yep, perfect.
It should now, okay.
It should be coming up. There we are. Thank you very much for this opportunity, and thank you very much for joining this session, where we talk a bit about the relevance of IP, intellectual property, in a broader sense, but primarily also for financing, and of course also for exiting your startup. Let me introduce myself a little bit to understand where I'm coming from. I have worked for 30 years in the high-tech industry at companies like Philips, NXP, Giesecke & Secunet. Certainly also at Philips, had a lot of dealings with IP and IP management, IP negotiations with other companies as well. Since about 6 years, I'm independent, and I'm co-founder of a company called Corporate Ventures Advisory, which I will explain in a second on the next slide briefly, but also some other companies. I'm co-founder of the startup Sustainabill in the field of sustainable supply chain. Also co-founder of a new startup, which is in pilot phase at the moment, called Team Maturity, where we can assess the strengths and the maturity of a startup team. So maybe also interesting for some of you. Would be happy to give you some more information later on that. As in the introduction was said already, I'm also in the board of the Business Angel Network in Germany. I also have been acting as investment manager, for example, for Unternehmertum. I'm working a lot with TechTour, the organization that is also behind this whole event, behind Investing Horizon, where I'm helping with all kinds of programs in the field of finding investors and startups, And I'm sitting on the board of a number of startups myself as well. So I take a look at it from different perspectives, from the startup side, from the corporate side, and from the investor side. And I'm specifically also active in the IP space, which I will show at the end of my presentation. I'm working closely with the European Patent Office to organize a range of events, conferences on the topic of IP for startups and for investors. So very important to mention that I'm not an IP lawyer, so don't ask me too technical questions on IP. I'm talking primarily about why it is relevant from a business perspective to pay attention to IP if you are a startup. As I mentioned, I wanted to briefly explain what I'm doing with my company, Corporate Ventures Advisory, focused on making introductions, doing actually what we call matchmaking, curated matchmaking between ventures, so startups and scale-ups on one side, corporates as lead customers on the second side, and investors, VCs or business angels on the third side. So that's what I'm doing basically for a living right now, besides all my other hobbies like helping you on your IP strategy. To start with a very high level picture on your business, you have in general, if you are a high-tech startup, 3 ingredients to make you successful. You need to have a winning team, you need to have an innovative solution, and you need to have paying customers. So the question is, what is the role of IP in this context? Well, that's illustrated here a little bit. The winning team is probably a good team with a lot of technical expertise and insights in the market. So you create a lot of good ideas which you want to protect as trade secrets. So you don't want everybody to know about your good ideas because you want to keep them for yourself and make innovative solutions based on your trade secrets. Now, as you want to sell ultimately your innovative solutions to paying customers, you have to talk more about how your solution works, also to investors. And in order to do that without losing your secrets, you have to patent your innovative solutions, your innovative inventions, create them as patents so that the winning team becomes the owner of the patents and you are protected from imitation, from stealing your ideas, while you still can talk about it and sell your innovative solution to paying customers. So that's the basic idea, I would say, behind IPR in general. Here I'm focusing on patents, but I will explain in a second that there is more than patents to it. But this is the basic idea behind it. Now, there is also a small arrow here going down, which says publish. An alternative to patenting your innovations or keeping them as a trade secret, you can also publish them. The advantage of publishing your innovations or your inventions is that nobody else can patent them anymore because they are now in the public domain. And that results into what the patent lawyers usually call FTO, freedom to operate. So you can't be hampered by others to implement your ideas, your innovations, and sell them because you have published your ideas and nobody else can patent them anymore then. So that's in a nutshell the whole principle, the relationship between IP and being a successful high-tech startup. Now, there are a lot of ideas and perceptions also about IP in the startup world, and there is a startup reality, and they do not always fit. And that's why some people don't want to spend too much time and money on patents, but that might be a mistake in the long run. First of all, the startup reality, of course, is that you are having a short-term focus. You have to survive until the next financing round. You might have to pivot a lot of times, change your strategy because you're learning every day. Of course, you're very much focused on winning customers because that's the most important thing to do for a startup. There are a lot of urgent things to deal with. And as I mentioned already, you have to survive until the next financing round. On the other hand, there's a lot of perception, at least, about IP and specifically about patents, that filing a patent and getting a patent is a long-term process. You have to make a long-term commitment for this patent because it might take years before you finally have it. It doesn't help sales directly, so why don't you focus on winning customers and getting money from customers instead of spending the money on filing patents? Patenting takes time. Yes, it does. So it takes time away from your management and from your best engineer. And it is an expensive process. And indeed, to go through a full filing process for patents is expensive. So you have to reserve substantial budget for it. So as you see from this picture, it's not a trivial thing. It's not that obvious that a high-tech startup should put a lot of effort and money into filing patents. Nevertheless, I will argue that it is important and you should spend the time and the money on it. Let's look a little bit at some analysis of the European Patent Office here. The references are down here. And also at the end, I will show you some links to where you can find all those reports. But there is a lot of evidence that patents actually increase the chances of growing your company successfully and also getting financing. And if you see here on the left, if you have a patent before you actually start to grow, after the patent you have a 22% higher chance of successful growth of your company than if you didn't have a patent. You even have a 9% still growth, increased chance of having high growth. High growth is defined here in this study by more than 20% growth per year over 3 consecutive years. Now, if you have a European patent, so not just in your home country, but for the whole of Europe, those percentages are even higher, as you can see here on the right. 34% increased chance of successful growing your company if you have patents. Now, also there are some anecdotal evidences. Unfortunately, there are not so many studies, but there are some studies like here at the bottom of this slide in the biotech field, especially, if this is the case. And they found out actually that a startup with at least one patent received their first VC investment 76% faster than startups without a patent. So there is a lot of evidence and anecdotal evidence, at least, that having patents also will help you to get your first VC investment or follow-up investments faster and probably also at a better valuation of your company. And also the success of an exit, so selling your company after a number of years after you have been successful doing an IPO or selling to a larger company. The probability of success of such an exit scenario are substantially higher if you have patents. This is another study from a Paris organization, a bit older, 2014. But again, as I said, there's a lot of anecdotal evidence. A lot of people confirm this in practice that this is the case. So a couple of good reasons to pay attention to patents if you are a high-tech startup. Now, this is not specifically about startups, but this is a study of the European Patent Office for SMEs, so small and medium enterprises. So this is not just startups, but a lot of them, of course, are still startups or in an early stage. And they have been asked, why do you actually invest in patents, filing patents, but also maintaining patents? And the main reason, is not so surprising, as you see here on the left, is to prevent imitation, so to prevent people stealing your idea and copying your products, 83%. Very important point is also reputation. If you have patents, you have by definition a better reputation for your company. It's always nice to be able to say we have patents on this innovation. Freedom to operate, as I explained on my first slide, is also an important reason. So you don't want to be attacked by others because they have a patent on what you are doing. So we have to realize patents are not just to attack others that want to copy your invention, but it's also to prevent others to attack you because you are maybe infringing on their patent. It's important to have a patent portfolio to negotiate, and I will come back to that in a second. To be able to negotiate better contracts with customers and partners is also mentioned as an important reason. Licensing your technology is a lot easier if you can protect the technology by patents. And last but not least, here on this slide is mentioned financing. So it makes financing of your company easier if you have patents. Now, my personal opinion is that this 35% is very underestimating the importance because, as I show here on this picture, all those things like reputation, like freedom to operate, like licensing possibilities are all important arguments for an investor to invest in your company. So I think all those reasons are relevant if you want to get the next financing round for your company. Now, as mentioned at the beginning, patents is just one of the different alternatives to protect your intellectual property. Another one is copyrights, as I think a lot of you are familiar with. Design rights is also an important one. Then we have the patents. Then, as mentioned already, trade secrets, so just don't tell anybody about it. And last but not least, as I mentioned on my first slide, publication of your inventions can also be a good strategy, because nobody else then can patent them and protect you from using your own invention. And there's one thing I just wanted to highlight here, and I can give you some links to this topic later on. But there are a lot of people still that believe that you can't patent software. Now that's, in a strict sense, that's true, but in practice it's not true, because you can patent computer implemented invention, as it is called. So you don't patent the software itself, but you patent the complete system of the computer running the software. So if people are telling you you can't patent software, tell them that they are not really up to date. You can patent software in combination with hardware. Now here's a pretty full slide, which also illustrates already that there are a lot of reasons why you want to have intellectual property, and especially patents, as a high-tech, high-growth company. Firstly, as briefly mentioned already before, to make sure that you have freedom to operate, that you can run your business without having a big risk of being confronted with an IPR infringement claim or court case by another company that has a patent that you are using with your product. Now, this is quite often overlooked pretty much by an early phase startup. They think we have to patent our own ideas in order to protect them from being copied, which is the next point here, the competitor stealing my ideas. But the other side of the story is you have to build up a patent portfolio to be able to negotiate if another company would tell you that you are infringing their patents, and therefore you have to pay them a lot of money. If you have some patents of yourself, there's a good chance that this other company that wants to infringe you, that basically wants to attack you, sorry, for infringement, that they would have to use your patents. So you have a negotiation position. And that is the third bullet here, the third main point here, is to have a negotiation position with people that attack you for patent infringements of their patents, to license technology to customers, maybe as part of a product or a service, or separately as a technology license. It's a lot easier if there are patents behind your technology. You can also leverage your IP in combination with a standardization project, for example, or in just any cooperation project with partners. And of course, as I mentioned already, you can use your own IPR to defend you in the case of a third-party IPR infringement from another company. Next reason why IP can be very important for you is to have business model flexibility. You don't know always when you have a startup what is your ultimate business model. Maybe you initially start to think about selling your product, but over time you think that maybe licensing your technology to others that can make the product much more efficiently is a better business model. So to change a business model in that sense, it is good to have patents already, so you can change your business model from selling products to licensing later on. Also very interesting, of course, is if you're focused on a specific market segment or a specific application, your technology might also be useful in other domains, but you don't want to spread too thin as a startup. So it could be very interesting to license your technology based on your patent portfolio to other markets that you don't want to address yourself directly. Next point is collateral assets. You can use IP, your patent portfolio, as a collateral for securing loans, financial loans. Now, it's different in different parts of the world. For example, in South Korea, this is a very well worked out system supported by the Korean state as well. In Europe, it's maybe a little bit less developed, but still having an IP portfolio helps you to get loans. It certainly helps you, and that's the last point on the slide, to get a higher company valuation at the next investment round, to get a higher valuation when you sell your company, when you do an exit. And it also can be interesting for the shareholders in your company, so you as the founders, but also the investors, to have something of value in case your company doesn't work out and you have to file insolvency. In the unfortunate case, which, as we all know, is statistically not so uncommon, you at least have some patents that maybe you can still generate some value from. So that's a long list of reasons, and every situation, every company is different. So I try to just give an overview of the potential reasons you could think of to put attention and money into IP. And the overriding one is, of course, as I mentioned also before, is the reputation of your company. Now, as I just said, the patent relevance and the challenges to deal with patents are very different per company. They're very different on a number of factors, which I list here. For example, the industry speed. If you're in a fast-moving business, of course, it's much more difficult to keep up with innovations through the patent system, because the patent systems indeed take time. So generally, in a purely B2C business, there's probably a little bit less suitability of patents than if you work, for example, in the pharma industry or the energy industry, where you have long industry cycles, where the products have a long lifetime. So depending on the industry you're working on and the innovation speed in that industry, patents might be more relevant or less relevant. Also depends on your business model. If you are thinking about B2B product sales or technology licensing, then patents are very important. If you are more in an online services business or in a project business, probably there are other factors that are more important than an IP portfolio. And then again, also in the ambition, if your brand is more important than the technology, if rapid growth and a quick exit, if you want to get rich quickly, so to say, then maybe patents are not the best approach to you. But if you want to grow a business that has a long future, that can expand into other business models, where you are considering an M&A deal as an exit, then again, patents are important. So a lot of different aspects to determine before you can decide what is the right patent strategy for your business. Let's look at a bit of the perspective from the outside, from your partners, your business partners. Why do they think it's important for you to have a patent portfolio? So if you're in the B2B business, what do your customers or your business partners think about the importance of your IP portfolio? The first thing is continuity. Of course, it would be a disaster if you have a customer, a B2B customer that starts to depend more or less on your solution, and you certainly get attacked by another company for infringing their patents, and you have to pay a lot of money, or you even go bankrupt. So you have a problem with your freedom to operate. That's of course not good for your customer. So the customer might ask, do you have covered your innovations by patents, and do you have checked that you are not infringing on patents of others? Negotiation position is another thing. Do you have actually the IP that the startup needs in the company, in your customer? Is more important than the IP of the startup. So you have a lot of issues in negotiating, especially of course with partners, even more than with customers, about who has IPR that might be useful. Maybe your customer has some patents that are relevant for you, or you have some patents that might be relevant for other businesses of your customers. So you have to take this into account as early as possible. Of course, you have the issue that you have to be aware of, that sometimes there are B2B customers or partners that want to learn from you, and to say it very black and white, steal your ideas and implement them yourselves. So this is always, of course, a consideration of large corporations. Do they need you as a startup, or could they just take the idea and implement it themselves? And of course, in that situation, it helps a lot if you have some core patents that protect you from the big corporation to steal your ideas. Of course, at the same time, it's fair to say that it is not so easy for a small startup to sue a large corporation, but at least you have a negotiation position. So those are a couple of perspectives from customers or partners. Let's take a perspective from investors, which is a bit more my focus here in the discussion. So first of all, the defensive use of your patent portfolio. And that has to do again with this freedom to operate. If you get attacked by another company for infringement of their patents, you want to be able to have a patent portfolio yourself to defend yourself and to negotiate a deal with this other company. The other use that investors, of course, are interested in is offensive use, to avoid that copycats grab market share from you, steal your idea, and implement the product that you initially developed and invented. Business model flexibility, I already mentioned, of course, very important for investors because they can't be sure upfront whether the business model that you start with is the business model that ultimately will be successful. So you want to be able to change your business model. That's a very interesting factor for investors. The exit value, already mentioned, of course, if you have a good patent portfolio, the chances that you can sell your company at the end against a good valuation is increasing. And as I mentioned also, the remaining value. If the company would go bankrupt, you still have some patents that maybe you can sell. So that's also not only for the founders, but also for the investors, of course, interesting to know. Let's move to the options that you have as a startup to deal with IPR and a patent portfolio. One approach, which is more or less the Silicon Valley approach, is to file a lot of patents very early on, sometimes even before you start a company. Now that is, of course, very attractive because you can cover many scenarios. You build up a strong IPR portfolio. The disadvantage is that it is very expensive, it costs a lot of time, and you might file a lot of patents that are not relevant for your business anymore once you are in the market and get some market feedback. The second approach is to first focus on trade secrets. So keep your most important innovations secret within the team. Try them out in the market and patent them once you know that they are really valuable. Now that's of course a cheaper method upfront. You get the validation from the market before you have to invest all the time and money. But there are a couple of big disadvantages. First of all, there's a risk that your competitors might file patents on the same ideas earlier, because your idea, your innovation is probably not unique in the world. And secondly, there is always, of course, a big risk of leaking some key information. And once it gets out in the public, you can't patent it anymore. Then a third option is to apply for a provisional PCT patent application, which is very low cost, not a lot of effort, because it's not a full patent. And after that, you have then 30 months to validate and refine your full patent application. So you can check in the market, you can refine it, you can decide whether in the end you want to file a complete patent application, but you win time, which is very valuable for an early phase startup. You win time and you also have the chance to refine the patent before you finally apply it or send in the application. Now, of course, that means you also have to wait with licensing opportunities. It's not a real asset yet for your investors, so it also has some disadvantages, but in general, this could be a very good approach. The last thing, just to mention here, one patent at a time, of course, sounds very attractive for a startup, limited cost and time, have a first patent, etc., etc. However, you have to really think that one patent doesn't make a portfolio, and in the end, you need to have a portfolio of patents, number of patents, to really have a strong asset and a strong negotiation. So the key question, do investors like you to invest in IP? And there have been some studies into that, and the interesting thing that comes out of that, which I also hear from a lot of startups and from investors, that they say, yes, before they invest, they love if you have spent already time and money on filing patents. So you come with a patent portfolio and then they invest. However, there are a lot of investors, unfortunately, that then say, once they put the money in, now just focus on selling and getting revenue from customers and don't waste your time and money anymore on filing more patents. Now, that is not a good thing, I think, in general, So you should be aware of that. And therefore, I also highly recommend that if you believe that you want to build up an IP portfolio and you want to strengthen it over time, to discuss your IPR strategy already during an investment process. So you don't get those surprises from an investor that you might get after they invested. So make sure that you are on the same page with your investors about the importance of an IPR portfolio. The other thing that comes up as a question a lot of times when you have discussions with investors is how much can you disclose to the investors? Because they want to know, of course, how things work. What is your invention? What is your innovation? On the other hand, if you haven't patented it yet, that's a risky thing to do. So the most important thing to discuss before you talk to investors and even before you talk to customers, to decide within the company, within your startup, what needs to be kept secret, what is really worthwhile to keep secret until you have filed a patent for it. And you have to practice this secrecy with all the staff. You have to limit probably to which people in your organization know the exact details of your inventions in order to avoid leaking it. Now, this is a very difficult thing because it's, of course, very tempting, especially for technical people, to be proud of their invention and to explain that, for example, to investors how it works. But once you have explained it and there is not an NDA in place, in principle, you can't patent anymore. So, of course, it would be nice to discuss all of this under NDA, but investors are, for good reasons, very reluctant to sign NDAs at an early stage. But during, of course, a due diligence process, you have to have an NDA in place because then you have to put all your books open and also show all your inventions. But please take into account that normally at pitch events and pitches that you send around to investors, they are not protected in any way. Even if they say confidential on it, this is not enough. So make sure that what you present at pitch events, or what you put in pitch texts that are sent around in the whole world, that you don't put your trade secrets in there, the things that you still want to patent but haven't patented yet. So coming to the end, basically of this short overview, and this is a phrase in yellow: treat IPR as your currency. That's a phrase that somebody, actually a VC, brought up in one of those sessions that I'm organizing with the European Patent Office, and I think it's a very good phrase. You have to think of IPR and your patent portfolio as a currency for your company. It's just as important as cash in the bank. It's key to secure investors at a good valuation. It's very important to strengthen your negotiation position with partners, with customers, and with investors. It's a good security for changing your business model, getting loans, and those kind of things. And it's very important for your exit process and the valuation once you sell your company. So treat it as a currency and not just as a technical document. Concrete recommendations on how to deal with IPR. Start building your IPR portfolio as early as possible. It's really a mistake to wait until you have developed and validated your product in the market, because the chances that your invention has been leaking already to the market, then you can't patent it anymore, are big. The chances that somebody else came up with the same idea and in the meantime has patented it are also pretty big. So don't wait. Start building your IPR portfolio as early as possible. Choose your optimal IP strategy also. Decide explicitly what you want to patent and when, what you want to keep as trade secrets and for how long, or maybe forever, and what you want to publicize in order to have freedom to operate, so to make sure that nobody else can patent your ideas. And you can't do that for everything, so you have to determine which of your intellectual property rights are the most valuable for the company. On the right-hand side, here are a couple of recommendations. Embed the IPR strategy in your daily business. This is not something that you can do once per year. You have to make sure that your R&D people are thinking about ideas that can be patented on a regular basis. Maybe not every day, but maybe once a month you sit with them together and brainstorm what could be patented. And usually there is a lot more that can be patented than you think in your day-to-day business. But also sales has to understand the importance of the IPR strategy and what they can say to customers, what they can't say to customers or partners or in public presentations. And to make that all work in a small startup where there are a lot of other priorities on a day-to-day basis, it's very important to have an IP champion in your team, to have somebody that is responsible for your IP strategy and reminds everybody in the company on a regular basis about your IPR strategy or the need to make one. That also means allocating an explicit budget for this and aligning that with your investors, as I mentioned before, already during an investment process, during the due diligence process. Make sure that you have a common understanding about the importance of your IP portfolio with your investors to avoid a lot of difficult discussions afterward, especially when you have to allocate money to this. So those are a couple of practical recommendations. I hope they help you a little bit to think about this topic. And as I mentioned earlier on, a couple of references. One is actually coming up pretty quickly on the 28th of October. I am moderating one of those events of the European Patent Office. It's starting in the morning, very early on in the morning, because we have people from Korea presenting there as well. A case study, a very concrete case study from a startup that is already growing very rapidly in South Korea, with a couple of really good people, a couple of VCs, IPR experts. So really interesting to learn from. It's for free, so join that if you can. The other session on licensing, unfortunately, was already recently on the 30th of September, but you can soon see actually the recordings of that also on the website of the European Patent Office. And on the 18th of November, there's another very interesting seminar also with a concrete case study on how to prepare your company already early on to ultimately sell it at a good valuation. So I would very much invite you to join on the 28th of October, 8 o'clock to 9 o'clock in the morning. So it doesn't take you away from anything else except for your breakfast, but you can enjoy the breakfast during the session. Here are a couple of links. And of course, you will also get the handout afterwards, so you can look them up easily. For this event on the 28th of October, here's the link at the EPO website, epo.org Business Forum. Very much, I would also recommend to take a look at the next link. And I published there one article, why technology startups should be paying more attention to patents, which describes in more detail a lot of the things that I presented here, and also has a lot of references to articles that give you more details on that. And on that website, from the Licensing Executive Society International, LASI, you can actually find an electronic version, so it's completely free, of this complete publication, which is dedicated to IPR for SMEs and startups. So very worthwhile to browse through that and read a bit of information. Next one is LinkedIn site. So this initiative of the European Patent Office has a dedicated LinkedIn site where we publish a lot of announcements of events and interesting publications. So would be very happy to see you there. Join this LinkedIn group, High Growth Technology Business Initiative. And of course, if you want to contact me directly, my email address is here at the bottom. So with that, I hope I didn't overwhelm you with too much information, but I hope I inspired you to think about your IPR strategy.
Thank you, Willem. Very, very insightful session, I would say, full of information. While I invite participants to ask their question in the chat, maybe I open with some question from my side, just practical, in the sense that you gave a lot of advices, but sometimes my perception is that SMEs, startups struggle to find resources to both people who can deal with IP issues, as well as to work on the IP strategy. So do you have any advice in this regard?
Yeah, so definitely resources is always a problem for startups. Time and money, I would say. therefore, I mentioned also already one of the approaches is to think about provisional applications for patents, which is a lot easier in terms of time, but also a lot less costly. So that's one of the approaches. I still think it's very important to make sure for every high-tech startup to spend occasionally some time with your management team, maybe with your key R&D people, and potentially also with your investors, to think about what is your IPR strategy. I think that's the most important first step, and that doesn't have to take too much time, to make an explicit IPR strategy, to say how important is it, what do you want to do, you want to patent, do you want to keep it as trade secrets, what are your most important inventions that you made, maybe without even knowing it, realizing it. So spend some time, occasionally, maybe start with doing that once a month or once a quarter, preferably once a month. Just spend 2 hours on a Friday afternoon, whatever, to think about what you could do with an IPR strategy.
Thank you. Now, question from our participants. The first one is if you recommend to fill in patents for artificial intelligence software and algorithms.
That's a very interesting question, and a very hot topic, I have to say, also of the European Patent Office. So there are dedicated people, and they will also organize dedicated sessions on this. And also next year will be a big conference here in Munich of the EPO, specifically for startups and investors. And this topic is one of the key topics there. So it's part of this computer implemented invention concept. So yes, you should look into that. It's still a complicated topic, so you preferably have to find some specialized IP people that are specialized in computer implemented inventions. You have to think about also in the AI space, I think, what can you patent, what can be copyrighted, what to do with the data. So maybe the data structures you could potentially patent in some ways, or the algorithms, but the data also might be interesting to protect through copyright mechanisms, etc. But this is a very complex field, so and I'm not the expert in there, but it's certainly possible. So don't let anybody tell you that you can't patent anything in that space.
Okay, let's go to the other question from Alec, who is asking two different questions. The first one is, which is a good strategy to, if it's a good strategy to publish right after the patent. Not sure if.
Depends on the situation, I think. So first of all, once you have patented, filed for a patent application, after in most situations after 18 months, your application is published anyway. So people that are really searching for it can find it anyway. Whether you want to publish it yourself after you have filed for the patent or achieve the patent, I would say in general, I wouldn't see the reason for it. It's good to say that you have a patent or you have a patent filed, but why would you explain to everybody how you're doing it? Because if enforcing a patent is very difficult and very expensive for the startup, so you don't want to stimulate copycats to start copying your invention, and then you have to sue them. That is a very difficult process. So maybe I didn't understand the question right, but I would be very careful with that.
No, you partially answered to the next question, which is when should co-founders transfer patent rights to their startups, and should they do that?
Also a very good question. And I think that situation is very much dependent on the country where you're in and the legal and the tax system where you're in. So I can mostly talk about it from a German perspective. And in Germany, it can be a really problem if you do this too late. And let me explain why. And maybe in other countries it's the same. So in Germany, if you transfer a patent from a person, from one of the founders as a private person to the startup company, there is a value attached to that patent that you transfer. That means that you as the founder or the inventor have to pay in Germany immediately tax over this. Not when you get any money in, but because there is a value attached to the patent that you transfer to the company. Now, if you do that early, before you get investors in the company, in the startup, that's not a problem because there is no valuation of the company yet, and therefore also not really a valuation of the patent, only a hypothetical valuation. But if you, for example, already have 1 million invested in your company and the company is valued at 4 million, then the tax office in Germany will argue that the patent that you transfer to that company must be something worth. So you have the risk as a founder that the tax office is immediately sending you an invoice for taxes to be paid. So you have to be really careful with it. So the earlier the better, I would say in general. Once you start the company, make sure that at that moment also you transfer the IP, which is also important for the investor, because an investor will not invest in a company when one of the founders has the patents privately.
Okay, thank you. Next question from Isabel Kunst. She's writing that they have a few patents and are considering to licensing them. And the questions are, what would be the first step and where can they get advice on this?
That's a very good question, but a very broad question. It depends very much, I think, on the situation. So a couple of things to that. One is it's very difficult to license for money just 1 or 2 patents. And the reason is that a patent is just the invention, the idea of the invention. But you also need, in many cases, expertise to understand how to implement the invention or the patent into a real product or a service. So just licensing the patents might be difficult. If you do it in combination with a product or a service to help the licensee to implement your patents, that's a lot easier already. So you have to look at the total value proposition that you can offer to a licensee to make the total package very attractive, which is usually more than just a patent to license.
Great, thank you. Another couple of questions. The first one is, how do you protect your patent when copied? And the second one is a long one, but I'm trying to read it. What is the value in euro given to a patent application as an asset by a venture capitalist during a Series A? What is the value of one more large geographical coverage, so enlarged into USA, Japan, or other geographical areas? And I see one hand raised, but maybe better if you answer to these 2 questions, and then we give the floor to our entrepreneur who's willing to ask a question by mic.
Right. Yeah. Sorry, could you repeat the first question?
How to protect the patent when copied?
When it's copied. Okay. Let's start with that one and then come to the other. So in general, I would say there's not much you can do as a startup. It very much depends on who is copying it. If the copying company is a small startup, of course, you can try to convince them to pay you or to stop copying it and maybe threaten with some legal action. If it's a large company, that's probably not so much of a choice, unless you have an investor behind you that is really willing to take that risk and to also put the money into the legal support that it would require. So I think in general, it's a starting point for negotiating with the other company. So don't sue them, I would say in general, but think about how you can actually make a deal with them. So what is the cooperation possibility with this party that's copying? Can you maybe join forces or get something back from them, do a cross-licensing deal, etc., etc. So that would be my very general recommendation on that one. On the second one, the valuation of a patent at the investment round or the international patents, I can't say anything reasonable to that for multiple reasons. First of all, it's very much depending on your business. It has to fit with your business strategy. If you don't have a business strategy to enter Asia in the next 2 or 3 years, then the question is whether an investor would find it important that you have actually patented in Asia. The other reason, and it's a more fundamental reason, is that there is basically nobody in the world that can put a value to a patent. Of course, there are patent agencies that sell you that service, But in general, I think most investors, so we have that discussion a lot of times in those sessions of the European Patent Office with VCs, where we ask, so what is the value that you put to the patent? And in most cases, they say, we don't really know. It's part of the total package. It's part of a strategic strength. Do you have the freedom to operate? Do you have a negotiation position, et cetera, et cetera? But it's not possible, I think, in general, to put a figure to it.
I now invite Jimena Garcia to activate the microphone to ask the question. I saw the hand raised. Can you try to speak, to share your question? Otherwise, you can write it in the chat box. I fear I activated you. Yeah, we can hear you. Yeah.
Thank you, Willem. We are an IP company, so we see ourselves such as because we design, and the thing is we have several patents, but we are considering them to also take an alternative or complementary approach through trade secret protocol for some of our designs. And I would like to understand how is it valuable for investor and how you see combining both the strategies, especially because as you mentioned in the very beginning, it's a real burden to go for only patents or everything you do. So how do you see this? How do you see the combination? How can we make sure that our trade secret protocol delivers value? Maybe it's not as much as patentable as much as possible. Thank you.
Thank you for the excellent question. And I've seen quite some examples of startups that have a very deliberate strategy of patenting some elements of their inventions and keeping other things as a trade secret. For example, in the recycling business, where there are certain methodologies to process recycling material that you can patent in terms of the machines, but there are other things about the composition of chemicals, for example, that are just as well protected by trade secrets and maybe more difficult to patent or not so necessary to patent. So especially combinations of materials or how to produce certain things, how to operate certain machines, how to produce certain machines in the production process are things that maybe are very suitable for trade secrets, where there are certain components maybe of the machines that you can patent. So I think that in general, the combination of trade secrets for some elements and patents for the other, especially when you potentially in the future could also license the technology to others that want to build those machines for you, so you don't have to do it yourself, but keep some of the expertise, for example, in the composition of chemicals to yourself through a trade secret, like Coca-Cola is doing with their formula, might make sense. So I think it makes perfect sense to think about the combination of trade secrets and patents.
Okay, thank you.
Okay, thank you. I would say that we can close the session here unless there are last minute questions from the audience. In the meantime, I would like to thank you, Willem, for the insightful webinar, all the participants for attending and be so active in asking questions. I invite you to stay tuned with the Investor Horizon project, because there will be other initiatives that will be organized in the upcoming weeks. And I leave maybe the last word to Willem for last advice, maybe.
No, thank you very much. And just want to reiterate: treat IPR as part of your currency. So it's part of your asset of your company, and you have to make sure that you know just as well as you know your bank account, how much money is on there. You have to know how strong your IP portfolio is.
Thank you very much.
Thank you. Thanks, Livia.
My pleasure.